Welcome back to another video on the channel, guys. I've caught a little bit of an illness, but they can't stop us. Today we're doing a backtesting session of a random day as of 2024. You guys are familiar with the price action as of this year, so I've pulled up the first trade that I've taken, and then we're going to get into other trades as well, doing a random backtesting session, going through the models so you guys can get familiar with my thought process and understanding going into the AM session. Starting on the daily, we've pulled up NQ and ES, and we're going to work out our overall daily bias going into the AM session. By looking at the daily time frame as of now, I can see on both NQ and ES that we was in a daily bearish gap. However, it's been inversed, therefore the next draw is going to be the next daily high or imbalance. In this case, is going to be this bearish imbalance on the daily at 9399. Once we trade into that, then we can lean towards a bearish bias. As of now, we're bullish until that area. Now, on the 4-hour time frame, I can see two things. We're trading out of a 4-hour bearish fair value gap and also a 4-hour bullish gap. Now, if you kind of zoom in to this 4-hour bullish gap, the draw out of it is going to be to where? The next high or the next imbalance. So what you can see for price on the 4-hour is that the draw would be the next high. We've swept the high, therefore the draw's been met and tapped into what? This 4-hour bearish fair value gap, just resting above that previous high. So the 4 hours bearish and the daily's bullish. So far, it's going to be neutral. Now we're going to look at the hourly time frame to determine a overall bias. As you guys can see here, we're currently respecting and inside an hourly bearish gap. We did trade out of an hourly bullish gap. However, we met the draw by taking the high, similar to the 4-hour. Therefore, our hourly bias is bearish. So we have bearish, bearish, and bullish. We're currently leaning towards a bearish bias. Now, on the 15-minute time frame, let's take a closer look. From the inverse of the 15-minute bearish gap, the draw would be the high. We've swept the high, so we're 50-50. Now let's take a look to the left to see whether we're inside any imbalances, potentially, which we're not. So our bias on the 15-minute is simply just 50-50. So we're 50-50 on the 15. The hourly is bearish, the 4-hour is bearish, and the daily is bullish. So we have a bearish bias so far. Now on the 5-minute, we're not in anything because we're not in a 5-minute bearish gap. We are in a bullish gap. However, we swept the high and we've met the draw. Therefore, our 5-minute bias is also going to be neutral. Now on this day, let's take a look at the calendar and we can see we actually had red folder news as a CPI day at 8:30 AM, which you can see here caused an impact for price. This is why I like to use TradeZeller. I'm not affiliated with them at all. I only tell you guys the platforms that actually are the best to use and the best prop firms to use, but I'm not affiliated with anything. I don't care about these affiliation companies paying me a certain amount each month, but TradeZeller is the #1 backtesting tool to use, and you guys can see we have news come out at 8:30 AM, so we've got data lows and data highs, which is going to be an overall draw for price. Considering we have a bearish bias here, we now want to mark out data highs and data lows, look for a sweep of data highs to then target data lows. And then whatever you mark out on NQ, make sure you mark that out on ES as well. Then we can look for differences such as SMTs, etc. Okay, so let's fast forward price upwards to the first day of macro. We only trade 3 macros, 9:45, 10:45, and 11:45 AM macro. We don't trade London, Asia, or PM session. We only stick to these 3 macros. So let's fast forward price. Okay, so now we've seen a sweep of data highs. So manipulation occurred at the New York Open for a Judas swing. As you guys can see, the New York Open candle went straight for buy side and then came back to New York Open price. So we've had a Judas swing following a bearish bias, which is perfect, and a shift in market structure. Okay, we've just seen a further shift in market structure and still a draw for data lows as well. Now we're inside of macro. So now we're going to look for an entry off the first presented fair value gap inside of macro, which is going to be this one here. So once price taps this fair value gap on NQ, then we can get an entry for price. I'm going to run a 30 handle stop, which is above anything that will send price in favor of our trade. As you can see here, we do indeed have a mitigation block paired with the fair value gap, a shift in market structure, a sweep of liquidity, a Judas swing at the New York Open inside of macro for a clean draw with our bearish bias towards data lows. As you guys know, there's a specific checklist that I follow each day. The same checklist, the same approach each day for price, and it repeats every single week. Not every day does not mean that you're going to take a trade every day. Too many people in the concept of that they need to trade every day. There's countless days that I sit there and do nothing. So now let's see if we get an entry for price. There you go. The next green candle comes up, gives you an entry for price. Now we're going to target the first low that gives us a 2-to-1 risk to reward, which is going to be data lows. So we've caught an entry short, running a 30 handle stop. This short-term low, as it's a lot further away from break even, is now going to be where we actually trail our stops to where? Break even. Okay, we've taken that first short-term low, so now we're completely and entirely break even. And then whether NQ or ES takes data lows, you must ensure that you close out of the trade immediately. If ES takes the low, you close out on NQ. You don't wait. Otherwise, it'll be an SMT against you, which is not going to be in favor of the trade. As you guys can see here, as of today, on the trade we're looking at, this is an example of of a bearish SMT on ES, as ES did not take the high, NQ did, therefore it's a bearish confluence for the trade on NQ as well. And there you have it. Simultaneously, both pairs take data lows, and that's the TP there for 94.5 handles. Now, after a winning trade, especially inside of the first day of macro, or any macro indeed, you'll be done for the day. You close your laptop and you get on with your day. If you think that you didn't make enough in regards to dollar amount on that trade from hitting TP, it's down to the fact you don't have enough capital. You can't speed that process up by trading more macros, trying to get funded faster. There is ways to get funded faster over leveraging, which is a legit way to pass accounts faster. If you have the capital to do so, you can purchase 550k accounts, trade them with 10 micros, don't half risk, still taking valid trades, and then look to pass them faster than actually trading them with 6 micros like you should on funded. But when it comes to trading normally on a funded account, you must ensure that you're actually trading with the correct position size for longevity. Otherwise, you won't find yourself with accounts for that long. So now let's dive into Thursday and see what we get for price. So I'm going to pull the time to the start of the first day of macro. Right, so taking a look at price on another day. At Friday, 16th of August, you can currently see on the daily time frame, we are resting inside of a daily bearish Verley gap. Therefore, we're going to take a daily bearish bias. Now, on the 4-hour time frame, you can currently see this 4-hour bearish gap was previously inversed. Therefore, we can no longer see it to be respected. This 4-hour bearish gap was also inversed. Therefore, the draw is going to be the next high, which has not been taken on either NQ or ES. And also, as an added factor to a bullish bias on the 4-hour time frame, is that we've actually tapped into a 4-hour bullish gap. So the daily is bearish, the 4-hour is bullish, so we're currently neutral. Now on the hourly time frame, you guys can currently see we've traded into a 1-hour bullish Verley gap and then traded up to the next draw, which is going to be the next imbalance or previous high. We've traded into the hourly bearish imbalance, therefore the draw is lower. So the 4-hour is bullish, the daily is bearish, and the hourly is bearish. Therefore, as of now, we're leaning towards an overall bearish bias. So looking at the 15-minute time frame, as you can currently see, we traded into a 15-minute bearish Verley gap, which got inversed. Therefore, the draw is going to be the next high. We swept the next high, therefore the bias is going to be neutral, and then traded back into a 15-minute bullish gap. So if you take a look at ES, you can currently see we traded into a 15-minute bearish gap, which is the unfilled 15-minute bearish gap above on NQ. We've traded into that on ES. Then the 15-minute bullish gap, which we've then traded into after, which would technically give us a bullish draw higher, has been inversed on ES. SMTs between imbalances is a real thing, and that's now a bearish confluence for NQ on the 15-minute time frame, as ES is the stronger asset out of the two, so-called the leader asset. Therefore, the 15-minute is now going to lean towards a bearish bias, considering that's been inversed. So the 15-minute is bearish. Now, if we look on the 5-minute, let's take a look at what we can see for price. On the 5-minute time frame, I can clearly see that we've traded into a 5-minute bullish gap, which got inversed. Therefore, the draw is going to be the next low or 5-minute imbalance, which is going to be this unfilled 5-minute bullish imbalance as the overall draw, which is going to be taken as a bearish bias. So we can confirm here that our overall bias here is definitely going to lean towards bearish, as 4 out of 5 results lean towards bearish. Okay, so let's monitor price on the lower time frame and see whether we get any opportunities here inside of macro. Okay, so monitoring price inside of the second day of macro, there was no opportunities that I would look to take here. And this is how it is in some macros. You're going to take an opportunity, or sometimes you're not going to take any trade. As you guys can see here, going into the macro, the body of the candle did not close below that previous short-term low. Therefore, we've seen a lack of displacement for price. Therefore, no trade. So I monitor price through this second day of macro and seen that there was no opportunities for us to take. Now let's skip on to the next day. Right guys, taking a look at the daily time frame between NQ and DS on a completely separate month and a randomly selective day. As you guys can see here on the daily time frame, we was trading into a daily bearish gap, which has now been inversed, and ES is trading out of a daily bullish gap. So we have two bullish confluences on why price is going to draw higher, and the next draw for price is going to be the next daily imbalance, which you can see here, and the next daily high. That's going to be the overall draw for price on the daily. So the daily is bullish. Now if we look at the 4-hour time frame, you can currently see that we've traded into a 4-hour bullish gap to the left, and we're not trading out of any bearish imbalances. Therefore, the draw on the 4-hour is going to be higher towards the next 4-hour high or imbalance. In this case, it's going to be this high as the 4-hour draw, trading out of this imbalance. Now, let's take a look at the hourly time frame. Right, so on the hourly time frame, we're not actually inside of any imbalance at all. Therefore, we're going to take an overall neutral bias for price as we inverse the bullish gap. Therefore, the draw's lower towards the next low. The low's been met. Therefore, we're 50-50. hourly, and we've not traded into a hourly bullish gap. So we're going to take a bias on the hourly to be overall neutral. So we have the daily as bullish, the 4 hour as bullish, the hourly as neutral, and then on the 15 minute, you can currently see we're trading into a 15-minute bearish fair value gap. Okay, so by looking at the hourly time frame, you can currently see we're inside an hourly bullish gap. Price inverse that gap, therefore the draw is going to be lower towards the next low or imbalance. We swept the next hourly low, therefore we're 50-50. Now on NQ, we're not actually inside an hourly bullish gap, okay, but on ES, we're actually traded into an hourly bullish gap. So our bias on the hourly is bullish. So the daily's bullish, the 4 hours bullish, and now the hourly is also bullish as well. Okay, so by looking at the 15-minute time frame, we're currently trading into a 15-minute bearish fair value gap, and we're also inside a 15-minute bullish fair value gap to the left simultaneously. So trading out of the 15-minute bullish gap, the draw is going to be higher towards either the next high or imbalance. Then we've traded up into the bearish imbalance, so the 15-minute we're going to take to be bearish. Let's take a look at the 5-minute time frame. On the 5-minute time frame, we've traded into this 5-minute bearish imbalance. Therefore, we're going to take a bearish bias. If this gets inversed and we actually close, because this candle's still open for another 1 second, so upon the inverse of this 5-minute bearish gap, then the draw would actually be higher and bullish until the next imbalance or high, which will be this imbalance here. So the 5-minute we're going to take to be bullish because there's only 1 second left of the 5-minute, which is plainly obvious that the 5 is about to get inversed. So that's a 5-minute bullish bias. Our overall bias here is going to be bullish. Now we want to see, have we swept liquidity? So let's look on the 15-minute time frame. We're currently looking at Wednesday, and then you can see this is Tuesday, and then that's Tuesday, this is Monday. There you go. That's going to be previous day low. So we have an overall bullish bias for price. We've swept previous day low, which simultaneously is going to be London lows because that low was created at 5 a.m. Okay, so let's drop down to the 1-minute time frame and see if we get an opportunity following our bias. We've had a super sell side, we have a bullish bias. Now we want to see, do we get a shift in market structure on both NQ and ES, a fair value gap on both NQ and ES, potential SMT, maybe, maybe not. Let's see, do we have an SMT? As of now, yes, because this low created on NQ at 11:15 a.m. on Monday has been taken on ES, but not on NQ. So we have a bullish SMT on NQ at that low, which is an added confluence to our bullish bias. Sweeper liquidity. Now we want to see a shift in market structure with a fair value gap paired with a mitigation block or a breaker. Okay, we've seen a shift in market structure. We have a bullish breaker paired with that fair value gap, as you can see there. We're going to look for an entry. We're going to take a long off this bullish gap. You can clearly see we've had a body candle closure above the recent short-term high, which is our shift in market structure. This is inside of the second day macro. We're going to take a long off that fair value gap. We're going to run a stop placement at the previous short-term low, which you can see there. So a comfortable stop placement in this scenario is 20.75 handles. And we're going to look for the first 1-minute high that gives us a 2-to-1, which is this high for 43.25 handles. Okay, perfect. So is this trade A plus or is it B plus? So are we trading into a 5 or 15-minute bearish gap going against this trade? So by looking at price on the 5-minute time frame, we're currently trading out of a 5-minute bearish gap on NQ going against the trade. Therefore, it's going to actually be a B plus setup, and we're not trading into a 15. So we are trading into a 5. It's going to be B plus. We've had a shift in market structure on both, which is fine. We can avoid the 5 and 15-minute rule. It's going to be B plus. So instead of me taking this trade with full size, which is 12 full NQ contracts on my live account, I would take this with 6. So with a backtesting slippage of say a few handles and a stop placement at the low, we actually get a clean 2-to-1. When I run my TP, I always run it 3 handles below the point of buy side that I'm looking to target, or the point of sell side, I'd run it 3 handles above, depending whether you're long or short. So at 20.5 handles, I'd run it around 17.5, because if price creates equal highs, by the end of the year, you guys are going to save a lot of money and a lot of trades by doing this. As many cases you guys have seen that price would actually go back to your trading stops or go back to break even and won't actually take your TP. So for the sake of a few handles, make sure your TP is resting just below that point that you're looking to target. And there you have it. As you take that first short-term high with this candle, you would near straight towards break even, and then price takes TP. And guys, that's going to be it for our backtesting session today. If you found this useful and you want me to go over weeks and weeks of data as of different years, 2023, 2024, etc., then drop a like and a comment on this video if you found it useful, and potential suggestions for future YouTube videos as well. Make sure to drop it in the comments below. And if it's your first time hearing me on YouTube, make sure to subscribe to this channel, as you may not actually hear of my voice again. We're on road to 100k subscribers, and it's going to happen this year. I know you guys hear me as of now with a little bit of an illness, but that's never going to stop me. I'm going to head off to the sauna, and I'll be back tomorrow fully recovered. For those of you that is struggling with trading ICD concepts and you're possibly looking for extra guidance, I'm actually taking on a further 1 to 2 students for the one-to-one mentorship who are looking to get funded to fully understand and simplify their current thought process on a structured based one-to-one between myself and you in order to bring you to funded, profitable, and then scaled. And we can do that within a matter of a few months, not a few years, a few months, to the point of scaled. If that sounds like something you're interested in, there is a link in the description. We're not taking on thousands of applicants. I currently have 4 people and I'm looking for 2 more. In order to apply, there is a link in the description for that. Serious applicants only. And until the next video, have a great rest of your day. Take it easy.